Good morning, everybody, and welcome to the Monday morning market review, coming to you live from yours truly in Giffen, down here on the beautiful garden route of South Africa on the southern coast. And well, it certainly was a very interesting week that we had last week. I'm sure you'll agree with me. So I'm actually going to spend some time today going through the trades because I think it's important for you guys to at least see which trades you missed as much as anything else. I think that seems to have been a theme across a few of the folks that I spoke to during the course of last week. So we're going to have a look pretty much at all of the trades that you should have got, bearing in mind, of course, that I don't expect you to have taken all of these trades if you, as you should have been doing, are limiting your exposure to any one instrument. So that's something that you must just bear in mind. And when you look at the trades that I'm going to show you, if you had spotted it but didn't take it for a good reason, that's fine. But obviously, if you didn't see the setup at all, then that's something that hopefully will be a good takeaway for you. All right. So, in fact, let me share the screen with you where you can actually look at the trades. Right, so here we go. This is just the output showing all of the reward to risk ratios and so on, trade by trade. It is currently in date order, so I'm going to, well, let's just look at that first, and then I'm going to separate it by strategy. But also, just to bear in mind, this is based on trades that closed last week. So you'll notice that we did actually have two trades that closed last week, but that were opened the week before. All right, so looking at the overall picture, you'll see that a 1.54 to 1 success ratio, as you will know, is very high. 60% of the trades won. We don't normally expect it to be that high, but when we have a decent week like we did last week, then certainly you will have a higher proportion of losers compared to the average overall. Also bear in mind that this isn't weighted by strategy. I've also included our testing for the overlay or the trades that we took based on our current version of the strategy that we're testing. So I'll show you those as well. And of course, that has around a 50% success ratio anyway. And that is really what it came out at last week. I think it made a small profit, but overall, it it was pretty close to 50% success ratio as we would expect. In fact, I would say it did better than we would expect because when our core strategies are doing well, we don't expect the overlay to do well. That's the whole purpose of the overlay, is to provide a longer term balance, particularly when our core strategies are not doing well, is when our overlay does do well. So, but we'll have a look at that when I break down the strategies individually for you. So, first of all, quick look across the board, and also just on the right hand side here. If we were risking 1% per trade, you will notice what happened with the account. We didn't have any really big drawdowns. I think at 1% risk per trade, the biggest drawdown was just under 4%, which is pretty decent. Average reward to risk ratio, again, that's a bit diluted by the overlay strategies, and obviously it's higher for the core and lower for overlay. But what is interesting is if you had risked 1% per trade and had taken all of these trades, and maybe there's one or two extra in here and maybe missing one or two, but it should be pretty close to 46% that you would have made last week, which is a very good week. The week before was over 30. So, across the 2 weeks with compounding at 1% risk per trade, 80% return. Obviously, that doesn't happen all the time, not even remotely so. But it's during these times where conditions are really favorable for our core strategies that we need to make the most of the situation. So make hay while the sun shines. And of course, when conditions are not as favorable, we make sure that we hold our own. So certainly we don't lose too much. So we make a lot when market conditions are good. And at worst, we lose a little when market conditions are not good. Okay, so that's just the look of it over time. Obviously, here you can see where we had our worst drawdown, just under 4%. We had 4 full losers in a row. I think they were actually all overlays as well. And yeah, okay, so let's just resort this briefly. As I say, I'm going to take a bit more time today to show you the stuff. So I hope you are ready for a slightly longer session. Sort the range. D. Sort. Let's have a look. Right. Okay. So daily impulse trades that closed out last week, a total of 6. And moving across to the right here, and I could actually get rid of some of those others. But here are the 6 trades, 4 winners, 2 losers. So again, pretty decent. We had 1 full stop loss and 1 small loser. So what I could do is just get rid of the rest. It's actually not a bad thing to do. So we could just look at the pure numbers. Right, so 2-to-1 success ratio, that's double what we normally expect. What I'd say 66% is double what we normally have with the daily impulse. Certainly around a 40% success rate is typical. So yeah, definitely good conditions for it, and 2.65 to 1 reward to risk ratio. So only 6 trades, but nice. That scooped us just over 5% if you'd taken those. Remember, I'm just assuming 1% risk per trade. Of course, I don't want you to be risking 1% per trade on the funded accounts. On your own personal account, if you're trying to make some rapid progress and accept the increased volatility, then fine. But definitely not on your funded accounts. As you guys will know, those of you who are doing our funded trader program. Okay, so H4 Impulse, a lot more trades, a total of 27. That's to be expected. Exactly the same success ratio, funnily enough. We won 2 out of 3 trades, so that's great. 18 compared to 9, and a very good reward to risk ratio. Average winner was just over 2.03, average loser 0.68. So both of those numbers higher than average, with an expectancy of 5.93 to 1. Remember that, meaning that for every dollar you lost on the strategy last week, you made $5.93, and that's ignoring compounding. So very nice. Total return at 1% risk per trade would have been 34%. So very nice on the H4 Impulse. Thank you very much for that. Okay, let me get rid of both of these. And go down to, actually, I think I might have included our overlays there, but still very good return on the H4 Impulse. Right, so overlay, I'm just going to get rid of the weeklies as well. Right, so this is just for information. We're still working on it. 29 trades again, 15 winners, 14 losers. So there you can see almost 1-to-1 success ratio and almost 1-to-1 reward to risk ratio. So slightly on the profitable side. And you'll notice, yeah, we would have made 0.66%. So as I say, better than expected in a very good week for our core strategies. So we did have some significant turnarounds, and of course we had, like for instance, 3 winners on the euro, 1 on the weekly and 2 on the daily. And let's just have a quick look at those weekly ones. Not that that's really terribly relevant for you guys right now, but yeah, we did have quite a few, 4 weekly overlays closing out, and in this case we actually had 3 winners and 1 loser, which was quite nice. Oh, that's not going to work. But there you can see it, 1-to-1 reward to risk ratio and 3-to-1 success ratio on weekly, but it was only 4 trades. So a very small sample space, of course. So yeah, that's just a quick view of it. Let's go through the charts then. Let me just change to back to the charts. Let me share that screen with you guys. Okay, so starting as always on the euro, there's one of those weekly overlays. Very simple trade. Must say it was nice to see it go straight to take profit in 1 week. That doesn't happen nearly all the time, which is quite gratifying. Let me just close this down here. By the way, you can see that This is one of the evaluation accounts for one of our members. You know who you are. And well, in terms of current profit, over halfway to meeting the target for the evaluation stage before moving on to, in this case, a $40,000 portfolio manager account. So nice going there. No names mentioned. Okay, so that's the weekly. On the daily on here, you can see we had those two overlays in a row. The one last week was here, which also went straight to take profit during the course of, that would have been Thursday. And then Friday, we had the breakout, as you can see, which really was a setup to go and look for conditions for an H4 impulse. As you know, this trader didn't take it, of course, but nevertheless, this morning, there you go. The candle closing at 8 a.m. this morning, the next candle open, this would have been time to short with an H4 impulse stop, as you know, above the preceding fractal 3-6 trading stop rule, but this is really motoring. It might go straight to take profit, although I don't want to predict anything. But looking like a very nice trade this morning. If you didn't take it, don't chase it. Okay, so first of all, weekly on the cable, we've had that pullback, high test candle the week before, of course, and last week isolating that high, so definitely into a bearish retracement of this bullish trend. If you're trading continuation strategies for weekly, this obviously would be a setup. I'm not sure if it would trigger, but it certainly is a setup. But not many people do that. Of course, weekly is our selection time frame for the daily impulse. This is not a valid, these are not valid conditions on the higher time frame. I've had a question earlier when we were trying to do this live. Muna asked if we just have a pullback without actually being the end of the impulse wave. So last week's high test, not yet being an isolated high, technically on a single time frame analysis, is in fact still part of that impulse wave. But having said that, remember that the higher time frame is just a summary of the lower time wave pattern. So an impulse wave on the higher time frame, we'd expect it to be a bullish trend or bullish impulse wave, a bullish trend on the lower time frame. If cyclicity is broken down on that lower time frame, then we could also, it's another way of basically saying that trend or that impulse wave has in fact come to an end. So 1, 2, 3, 4, 5. If we look back to preceding Friday, that trend was in fact still intact. So if we had had an impulse candle last week, meaning that both the trend, which means that the weekly time frame impulse wave was still intact, then we would in fact have taken a bullish trade on this. That's the rule. So we wouldn't have not taken it, even though that bearish high test candle on weekly was quite a significant warning sign that the wave may well be over. So remember, we're not trying to predict anything here. We are looking to position ourselves appropriately. Now, this particular area that I'm discussing now is really at the cusp of conditions being appropriate or not. And in the variations on the impulse strategies that you can look at, one of those variations would be, in fact, to stop trading a little bit sooner. It would be a bit more conservative and less aggressive. You'd miss out on some of the winners, but you'd also miss out on quite a few losing trades. The higher the reward to risk ratio that the strategy offers, however, the more dangerous it is to be conservative like that. It's much more important to not miss the winners as it is to avoid the losers. So, I hope that answers that question of yours. It is a slightly more, something for a more detailed discussion though, and maybe enough for a whole training session. All right, so that's the pound on those two time frames. Clearly, nothing doing there for us at all. We didn't have any setups, but dropping certainly for the core strategies. But we did have setups now for the overlay. In fact, we had two. No, I beg your pardon, three. The first two were in fact both stopped out almost immediately. So The first one, we were able to trail the stop somewhat and reduce it by maybe 30-35%, the open risk on that. The second one was stopped out for a full stop loss, which was rather unfortunate because that day it rolled over. But that was the third setup, which we did take, and that actually we would have actually closed that out this morning for about a 0.6-0.7% gain on that particular trade. So yeah, not bad, but overall you can see on this pair, the overlay lost us a bit of money. Not ideal because we weren't actually having any core strategies trading at the time. So normally we would have had an overlay in conjunction with potentially a losing core, and the core would lose and the overlay would win. But this is taking every trade. And as you can see from the results overall for the week, it actually paid off. Okay, so dollar yen, I mean, this has been flying, as you can see. The week before we had the breakout, which meant that it was all systems go to trade this for daily impulse on the dropping down to the execution time frame on daily. I think you can see this trader actually took 1, 2, 3, 4, 5 last week, Monday. No pullback. We haven't had a single pullback here at all. I often talk about waiting for that pullback. So normally that's what I would have done. But let me just have a quick look at this again on the weekly time frame. So yeah, okay, that was only the 5 days there. If you had taken, oh yes, okay, so you guys will know the WM heuristic. This is obviously a perfect W setup. And in fact, at the close of the week before, and I'm sure we must have discussed this last week, we had reason to believe we were in an impulse wave, perfect W pattern, because we had that outside C close, did not close inside XA, which means that that was actually a setup, even though we were still inside of the channel. So as long as you're trading those, and this is where we got that setup, which was really nice. Now, this was outside of the channel here, but remember, we're not really interested in that. The only thing we're interested in the execution time frame is that bullish impulse candle, which we got all the way back here. So that was a trade. We must have discussed this before, which triggered the week before, but it was actually last week where that hit its take profit. Now, if you're trading this with advanced targeting, you can see that your stop would be all the way up here where this stop, in fact, is at the moment, but with an entry all the way down here. So very nice trade if you're using advanced targeting and the WM heuristic on the selection time frame. So the other thing, of course, for this, though, is whether you got that daily or not, is this has been an H4 impulse all the way through since we had an outside close over here. So that would have been Monday, Tuesday, Wednesday, Thursday, Friday. The whole of last week, we could have traded this on the H4 impulse. I don't think we got all of those. Let me just have a look at our data window. Bring that out. Okay, so we're looking at from the first, where our vertical dotted line is over here. May have been some others, but I don't think we got anything in terms of pullbacks until we got this pullback here with a trade being executed there. The other reason, of course, is you would have been in an H4 impulse from the prior week anyway, and that took some time to actually hit its take profit. Then here we had another setup. That if you had taken that previous trade, you would have been at break even for some time, so no problem with loading up and taking another one. And likewise, you could say that you could continue doing that. Now that hit take profit pretty quickly. Again, if you're using advanced targeting, you would have been stopped out for 5-6 to 1 reward to risk, maybe even more. Let's just have a quick measure of that, because we had a very nice tight initial stop of called it 17 pips, and you would have made about 100, just under 140 pips. So very nice, work it out. You can see that's a very high reward to risk. I mean, the stats that I'm showing you on our spreadsheet, they are all standard targeting. But of course, with advanced targeting, you get these big monster winners now and again. But it is also true that at other times, you will probably most of the time, you would have hit a bigger winner with standard targeting, and you get taken out on your trading stop and advanced targeting for a smaller winner. That's the majority of the times, but it's these big monsters that really make up for that. Okay, so that was dollar yen. Dollar Swiss up next. Similar kind of picture in some ways, with this dollar strength showing itself. Let's just start weekly, where we had that breakout. We didn't have a valid W pattern on this as we did with the yen, but we had the breakout last week. So certainly could be looking to trade a daily impulse on this week. I always like to wait for that pullback, but these impulse waves are just flying, of course, and that's really where our H4 impulse comes in, to be able to trade these lower time frame or daily time frame impulse waves. So whether you're trading a W pattern or a breakout, we had the breakout some time ago. You could be and would be trading this on the H4 impulse. So then we had the first one all the way back to the 26th that we would have already discussed, which would have hit take profit. We had another one here on Monday, hit take profit. Then we had another one on the 3rd, Wednesday, that hit take profit, and another one, of course, on Thursday, which also hit take profit. So I think this is the only one we only had winners on the H4 impulse, but 4 of them in a row. That's not something we see every day, is it? It's also a setup this morning. I'm sure you guys saw it, and hopefully most of you took it. The open of the current 4-hour candle was in fact an entry. So yeah, make hay whilst the sun shines. Hopefully many of you guys are going to be hitting your profit targets for your evaluation accounts in the next week or two, and be moving on up to your portfolio manager accounts. Right, so USD CAD, very different picture here, obviously. Here we are on weekly. We are into an overlay on this, have been since the beginning of last week, if I'm not very much mistaken. Yep. And that stop has now been trailed. We've reduced the open risk on this by almost half. It's still languishing at the moment. There's not, excuse me, any real progress towards that being a winning trade, but that's not really the purpose of the overlay. Likewise on daily, you can see very much inside of that channel. Also had a couple of overlays as well over here, bullish overlays, because we have got our point A on the channel boundary. So, or it is the channel boundary. So we've had a couple of these. I think the first one also was a loser. The second one would have actually been stopped out this morning before starting to make progress towards the take profit on that, for a very small loss on this one. That's fine. Again, the overlay strategy is there to help us to reduce our drawdowns on our core strategies and nothing else. Okay, so yeah, that's it for that one, being very much in a ranging market. Aussie on the weekly, back inside of that channel as we discussed last week. Not only that, it was a bearish engulfing bar. I'm not sure that I made this clear last week, but when you've got a bearish engulfing bar, it's almost certain that that high will be isolated and you can move on from that. So there are very, very few exceptions to that rule. But in any case, once the week closes, it's guaranteed. So we've not only back in the channel, we're in a bearish wave here. Technically, this still is an intact bullish trend, but obviously very weak. So nothing doing for us at the moment, and no overlay either, because we did get a close outside of the channel. Right, on daily, however, quite a different story. So we had a bearish overlay here last week, which was also one of the winners. Nothing else, however, very much inside of the channel, breakdown and cyclicity. So this is a ranging market, no question about that. Kiwi, this did give us a bearish overlay on the weekly. I'm sure we discussed this before, which also hit its take profit last week. Another one of the winners. It is still very much inside of the weekly channel, however, so there's nothing else for us to look at the moment. However, we do get another bullish retracement and then another bearish wave without any kind of a breakout of the channel. That would in fact be another setup to short for the overlay. Daily, again, look at that massive reversal that we had the week before that we discussed. Last week, we did get that set up then to short this on an overlay, another winner there. As you recall, we had pretty much as many losers, I think one more loser than winners. So those are still, the losers still coming. You can hold on for that. All right, so that's the Kiwi. Euro yen, yeah, look, I mean, obviously this is still very much a bullish trend, impulse wave, and deemed to be an impulse wave, that trend with that bullish inside bar last week. Still, this is still daily impulse territory, of course, but you would have been in it, I think, for some time. Let's just expand this a little bit. So we were into a bullish daily impulse that hit that take profit. I think that was Friday, was it? This was on Thursday the 25th. Pulled back. We got another impulse candle there last week on the 2nd, being Tuesday. So Wednesday, we went long on this. Using our 2 5-step rule on this, we trailed the stop to this level here, and you can see that the trade has done exactly the right thing. It's pretty much, this one's looking pretty much at break even, so maybe he was able to get in on a bit of a retracement there. But either way, your risk has been largely eliminated on this. It was also a setup to go short, therefore, on an overlay, this on Thursday, which we did. In fact, we had a losing overlay here from Wednesday. That was a setup. It got stopped out for a full loss, but that was another setup. So that's why we shorted this on Friday. Didn't hit the take profit. We would have actually trailed the stop on this somewhat, so that's not entirely the correct picture. Talk to the analysts about this. Right, so we would have trailed the stop slightly to that point, and likely our, likewise, I beg your pardon, our take profit is also being pulled back slightly to reflect that. So that's how the overlay works. So this final overlay looking a little bit more promising. And this is really a good example of how, where we've got a core that's not working out, almost as that starts showing itself, we get an overlay set up to go in the opposite direction to kind of help make up for some of that. And very often, as you would in a case like this, if this goes down and hits take profit, it means we would have made 0.85% odd, somewhere around there, whereas we'd only have lost on my full risk over here, possibly 0.35, let's call it 0.4. So you would, in fact, with a core and overlay, one winner, one loser, have made some money. And that also makes up for the times where now and again you actually do lose both. So it's not like that doesn't happen. And as I say, we did have a loser here as well. So we can't forget that. And it would help make up for it. So if we take, let's say, a 0.4%, it wouldn't be that much, maybe 0.3% loss on the call, a 1% loss on the overlay, so 1.3, and a 0.8% win over here, that would give us a net of about a 0.5% loss across the whole story, across the whole picture. But obviously not ideal because we had that extra loser on the overlay. Usually you'd expect to have one winner on the overlay and one loser on the call with somewhere around break even. So despite that having happened, we saw something similar on the cable as well. Despite that having happened a few times, it was still a very profitable week, wasn't it? So just take those trades, folks. The law of large numbers, that's what we're working here. One of those 3 pillars. Okay, pound yen, here on weekly, again, a very long, extended impulse wave. One quick aside here, probably appropriate here. I've mentioned it before. People often talk about trends or waves being overextended, and they might be. In fact, the preceding week's high test was a signal that it might have been overextended. But look what happened last week. It just made another higher high wasn't an impulse candle, but still it was certainly a bullish candle. We can't second guess the market, folks. Those people who stopped trading down here because it was overextended have missed out on so much in the ways of profits. So sure, eventually they'll be proven right. We know that trends always come to an end sooner or later, and we end up with maybe a couple of losers, which our overlays help us with as well. But you end up losing out so much in terms of opportunity cost by not just taking the next trade. Here on daily, inside the channel, we had a breakdown of sequentiality of cyclicity as well. I think this was another one of those where we had a setup for an overlay that ended up getting stopped out, was not successful. But we had, because remember, higher time frame conditions are still correct and suitable for a bullish daily impulse. We did get another setup on that close of Wednesday, open of Thursday. We took it. Quite a nice reward to risk on that. And using our 2 5-step rule, we've already reduced the open risk on that to about 40% of the original risk. And well, we don't know what's going to happen. Friday wasn't great. Today is still messing around a little bit, and I'm not going to second guess what happens with this. We're just following our rules. So yeah, you'll take profits. This is obviously being traded with no take profit, which means advanced targeting. But if you were using a take profit, it would be up here. So nice one. You can see that the trader here has taken exactly the right trade with these 2 trade lines here. And as I say, they're obviously using advanced targeting. So nothing on H4 impulse, obviously, because we are inside of the channel and there's no valid W pattern to go along over there. All right, so Swiss yen. Weekly, we spoke about the previous overlay, which take profits a week before. Nothing last week for us to do on that. Looking at daily, you can see how it came down and bounced off of our channel support level. As it did that, it gave us a bullish overlay, which went straight to take profit on Friday. So rolling over again so far today, it's still quite early. It's still the morning of the London session. So I'm not going to comment on what's happening today because anything can happen. But yeah, that was really just that overlay that we got at the end of the week. There was a loser just before that as well. So a loser and a winner, but there was a winner before. There was a bearish winner, a bullish loser, and a bullish winner. So 3 overlay trades, 1, 2, 3, 4, 5, that at least closed out during the course of last week. Okay, so nothing on H4 impulse, obviously. Yeah, another very strong bullish impulse wave, and we've got an impulse candle on the weekly time frame here on CAD yen. So definitely suitable conditions. Then daily impulse, you can see the trader here took one, must have been there with that impulse candle through the course of last week. That just failed to be an impulse candle. Those of you who are trading the, well, I've heard me talk about the more aggressive variation on the daily impulse strategy where we look for low test, we look for signs of failure on the lower time frame before going long. Would have actually got in a little bit earlier, but making no real difference in this particular instance. Using 2 5-step rule, almost at break even here already. Must point out that we did have a losing overlay as well last week. If you were using standard targeting, this actually you'll take profit today. It just missed it. When I say by like, I think it was 1.5 pips, just did not actually hit our take profit on Friday, but this morning it has. So that's nice if you're doing that. If you're using advanced targeting, obviously you'll be staying in the trade a bit longer. Obviously also H4 impulse, that was valid for Friday. Remember Friday was also non-farm, so not sure that you would have taken any trades on Friday, and that's fine for the lower time frame stuff. We did have a few trades earlier in the week. Just remember, as long as we have got reason to believe that we are in an impulse wave of a trend on the selection time frame, which for H4 impulse is daily, then we can look for our final selection criteria on the lower time frame because the high time frame criteria have been met. So that actually started here where you can see, well, when we had this bullish candle. So That's when we started looking at the open of the following day. Some people saying it's a bit soon. That would have been Tuesday last week. Either that or Wednesday. That's fine. No train smash either way. If you'd gone for Tuesday and you had just waited for the pullback, ignoring the times that we discussed, because this was actually an afternoon entry, you would have got in here using the 3-6 rule. You would have been able to trail the stop almost to break even before you actually hit your take profit. That was also another setup, of course, to go long with an impulse candle here, which was a morning trade. So you could have gone long here at 8 a.m. on the 4th. Now, if you'd already had this trade yet, didn't hit take profit, but it was almost break even. So I personally, as long as I'm almost at break even, I don't know, someone's going to ask me for a number, I would load it up. Yeah, sure, why not? So, and that went on to take profit quite quickly as well. This is an example of where you're using advanced targeting. You would have actually been stopped out for slightly less, because we did get that close above standard target. So you would have started using aggressive trading stop. You would have been stopped out there for a smaller winner. So that was that one. Technically, this was another setup, but that was Friday. So non-farms, not a time where I really recommend people to trade the lower time frame. Certainly, if you're using advanced targeting, possibly, because you stand to gain so much if it goes. If we have a big surprise to the upside, but for the purposes, certainly also the funded account to keep you guys on the straight and narrow, to help minimize those drawdowns, both in terms of extent and time. I encourage you to stick to the standard targeting on that. Okay, so I did say this was going to be a slightly longer session, but I think, going through all of these, I'm pretty sure you're starting to get the picture. Aussie yen weekly inside bar. Many here you have an example of where you have that pullback high test the week before. Did it make any difference? Well, let's have a look. We dropped down to the daily time frame, and you can see through the course of the week we did get that set up to go long, but it's still languishing, isn't it? Still showing some significant weakness here. See, the trader did get long here as well. Looks like a little bit late. Should have gotten long at the open of the market, or else used a limit order to go long here. In any case, on the daily impulse, you can see that made some distance in the direction of our core trade there. Now it's pulling back. We've got an overlay in place, and we'll need to trail that. See if that gets stopped out, because we've been able to reduce risk on this a little bit, not much, because of the ATR rule. That stop level was too far away. Couldn't use that. All right, so not really working out, even though we had an absolutely valid setup to go long here for a daily impulse. We did have that breakdown in sequentiality of cyclicity on this time frame, which was almost like a clue, if you like, to this not really working out. In this instance anyway, but let's not let our selection bias get the better of us. So yeah, it's an interesting situation where there have been some signs of weakness when it comes to the bullish momentum on this, and we're seeing failure on that now with a real breakdown in sequentiality of cyclicity here. So nothing doing, therefore, also on the H4. We wouldn't have touched that last week as well, because we were inside of the channel and there was no valid WM pattern on the daily. Last of the yen crosses. Is it going to go? Try again. There we go. Similar picture, that high test on weekly, still technically in impulse wave, this bullish trend on that time frame, but a similar breakdown here in cyclicity on the daily time frame. So still not stopped out on that, but it's looking likely. I see the trader didn't trade this one as well, most likely because you don't want to be overexposed to the yen, I suppose, in this instance. Also the correlation, obvious correlation at the moment between Aussie and Kiwi showing itself. So that's a good thing. Right, let's move on to the Euro crosses. Euro GBP first up, another long, very extended bearish impulse wave in which is still technically, in fact, just a potential trend because we haven't had that second cycle outside of the channel. But regardless, you know, we obviously need to trade this as a potential trend. So dropping down then to the execution time frame for daily impulse. This, let me just expand this so it's a little bit more visible. If you're trading standard targeting, obviously you would have hit that previous target a while ago, looking for another setup, which we did get last week. I think that was Monday, close of Monday. So open of Tuesday, short of the market, using the 2 5-step rule that kept us safe for that period. Also 2-5. If this is your account, I think you've had 2 lower closes here. That stop should have been trailed to above this candle's high or the higher of these 2 candles' highs. So the stop is not actually in the right place. You know who you are. You're welcome to do that quickly. You're already in a position where you can trail the stop to above those highs, which is almost break even on this daily impulse. So I'll let you do that. So the take profit's still some way away, but it's nice to almost be at zero risk on that. Likewise, of course, you know, would you be looking, when I say likewise, compared to those last couple of pairs that we looked at, this is not a setup for H4 impulse because of the simple fact that we are inside the channel and we don't have a valid M pattern to short the market on the lower time frame here either. So there's been a little bit of breakdowns in cyclicity on this time frame here. We may well get a reestablishment of that bearish cyclicity, but for now, you need to stay out of that. So we can move on. I would say we did also have a couple of overlays here, a bearish one and a bullish one. I think one won and one lost. Right, Euro Swiss. Many of you have been saying to me, I need to get over my bias against this instrument. Well, certainly the last few weeks have proven you right in that because we've had that previous week breakout that we discussed, potential trend, therefore drop down to execution time frame. Well, let's actually do that on the appropriate chart, shall we? And yeah, we've had a couple of trades here. So if you're waiting for the pullback, there it is. If you also have waited for that impulse candle, as you should for the impulse strategy, that would have been your initial stop, which likewise you'd actually be able to, or you would have done, you would have trailed your stop to below that low using the 2 5-step rule before the close of Friday. You'd still be in this trade, still survived. So well done to the trader. Yes, you've done it correctly here. Yeah, still in it. The one thing I would say about this trade, we spoke about this in some of our previous trading, is that this is an example of chasing the trade. So this is not the correct entry point. It's a day late, effectively. This is the correct entry point down here. So that's why this doesn't actually look right. So you know who you are. I think a couple of you guys have been doing that. Do please make sure that you get in at the right time. Chasing trades is not a good thing. It takes longer to reduce your downside and it makes it much more difficult. It actually reduces your potential upside. So the name of the game is always minimize downside and maximize upside. Whereas by chasing a trade, you're increasing downside and decreasing upside. Right, Euro Cad on weekly again. So last week, very strong bearish breakout was actually stopped us out on a bullish overlay, which is fine, you know. But now, of course, we should be looking to short this market. I always like to wait for that pullback. So we certainly haven't had it yet. The Canadian dollar strength here in sort of almost tandem with the US dollar strength. So yeah, very interesting. With this very, very strong pullback. Now, obviously, Friday was non-farms again, but you can see that potentially otherwise you would have looked to trade this with a bearish H4 impulse, which certainly looks like that would have worked perfectly. You know, there's the, I think that would have been your initial stop using ATR, using the ATR rule. But using our 3-6 rule, this is already at break even. So I haven't moved that on from there, but certainly, you know, that's 3 lower closes that we had here on Friday. Now, I'm not saying you would have taken this thanks to non-farms, but there you can see, despite non-farm payroll, this would have actually worked fine. So you can actually see on the 12 to 4 p.m. candle last week, there was a little bit of movement there with thanks to non-farm payroll, but it didn't get to our original stop, and that in fact is where we trailed our stop to after that. All right, so yeah, nice, interesting price movement there. Right. Last two on Euro crosses, the inside bar last week, bearish inside bar on this is, in fact, if you're a channel trader, valid to start looking for a daily impulse. I would say, however, if you are trading the WM patterns, it's not, because we've got an inside C close over here. But otherwise, you know, you could drop down to the lower time frame, and you'd only be looking for that bearish impulse candle from today. And obviously, there's nothing as yet. We've got a current overlay running on this. Oh, in fact, that overlay hit take profit on Friday. So yeah, nothing wrong with that. That was a bullish overlay. There's no bearish overlay on this at all, thanks to the channel still being some distance away, or the resistance line for short trades being some distance away. Okay, then finally here we are on Euro New Zealand dollar. I said finally on Euro crosses. Another one of those load tests in this case, the previous week, which was here. So technically, just looking at that again, we've actually got that low isolated last week. So this is still a bearish trend, no question about that, but we're in a bullish retracement of that. So if you're a continuation trader, you might be looking for something over here. Otherwise, this is not suitable for anything for our core strategies at all. And you can see that price movement through the course of last week was pretty much worthless. There was no overlay here either, because we had that bearish outside close and we just had a whole bunch of inside bars. So looks like, however, we might get that high isolated today, but it might not. So let's wait and see. But nothing doing on the last of those. Okay, so something that shows a lot more clarity here on the first of our last pound crosses, GBP Swiss on weekly, another long, very extended impulse wave of what is still actually a potential trend. And then that obviously was set up for us last week to look to go long on a bullish daily impulse, which we got a very nice, easy entry, which we took on Tuesday the 2nd, the morning of the 2nd, initial stop, take profit. I think this just hit take profit. Unlike that other one where it just missed take profit, this one actually just hit the take profit. So we can actually just double check that. ATR take profit was 225. And just look at this. Top. Very close, quite difficult to see. I'm pretty sure we're out of that. In any case, if not, then you're certainly at break even. And if it missed your take profit, it would have just missed it. And hopefully it'll still go on to hit that. So on the daily time frame, of course, though, we did have that high isolated on Friday. So, you know, this is still a trend, but definitely a weak one. It just managed to be a full-on impulse wave, closing just above that preceding wave high. And that, of course, meant that whilst we were in that, we were able to look for our H4 impulse trades. And both of these were winners as a result. So, yeah, we had a 2-to-1 success ratio on our H4 impulse trades, which is very nice. These were two of the winners, obviously. And then, we didn't do anything on Friday. I don't think there was any setups anyway. Even if you wanted to trade on Friday, there were no bullish impulse candles until 8 p.m. on Friday evening. I don't know about you. I don't like trading that late on a Friday. Had you done it, of course, you would still be in this trade and be looking all right. Okay, so Gdp Cad, weekly pullback straight inside the channel, no overlay here, but technically this is still a bullish trend, but very much a weak trend. Likewise, deep inside the channel over here, we had an overlay short last week, entry take on the second, ended up being a small loser, just a really small loser. Nothing to write home about on that one at all. No call trades at all, obviously. GBP Aussie, very much inside the channel. We're in a bullish overlay on this now for the third week. So maybe we'll hit that take profit this week. Maybe we won't. If we don't hit that take profit, and that's the lowest point of the week, we'll just trail from there. And maybe we'll be closing that out anyway using one of our trade closing rules for overlay. So I just want to go back to that and have a look at the lower time frame. So yeah, here on daily, obviously also very much been inside the channel. We had that breakout there. It's not a false breakout yet because we haven't yet had that breakdown in sequentiality of cyclicity. So we did have a bullish overlay. This one was a winner. Yeah, this one was was it a full winner? I think it must have been. Okay, so but that's it. Nothing else doing for us. Let's see what happens now. If we get a higher close, then, well, I mean, if we get a close outside of the channel, obviously we could then look to trade that on the lower time frame. But it is not a strong trend. There's no valid W pattern here for looking to go long at all. Last, the pound crosses again weekly, very much inside of the channel. Hasn't been any overlays on that either. Very quiet there. Here we had bullish overlay that was just over 0.5% profit, I would imagine. Closed out on first thing Friday, or last thing Thursday, I should say. But yeah, this is definitely continuing today. Let's wait and see what happens, of course. We don't have anything to say to this just yet. So nothing to do there with core strategy. So getting back to strongly trending markets here, CAD Swiss, Canadian dollar strength showing itself again. We've been trading this now for going on a month on the daily time frame for the daily trending strategies. So both the continuation and impulse strategy doing well. Daily impulse take profit hit last week. If you're using advanced targeting, you'll still be in this, and you'll locked in probably just a bit more than, or to the end of today, you'll be locking in just a little bit more than what the standard targeting would have scored over there. And last week, this was valid pretty much the whole week to trade on H4 impulse. So looking here from a second there, you can see we had one that managed to survive a little bit of languishing and eventually went on to hit that take profit. You might say there was another setup here, yes, but we hadn't been able to manage our risk down enough. So this is an example of where I wouldn't have yet loaded up. But the next setup that we had over here, certainly we've been able to trail our stop almost to break even by that point. Took another one, and then they both went on to hit take profit. In fact, I think perhaps this candle would have hit standard target for that preceding one, and at the same time given us another setup to go long, and that went straight to take profit on the same day. Another setup here, this is one of the losing H4 impulse trades, immediately turned around and stopped us out there, obviously, which is a pity. But that was on Friday, so that was in the run-up to non-farms. We actually got taken out of that one. So there's an example of where it didn't work. And then, of course, it's now continued. So didn't do anything else late on a Friday. Let's see what happens. It's definitely still valid conditions to go with this at the moment. we might be seeing all of this come to an end, but we might not. We might not. All right, Aussie Swiss on the weekly time frame, inside bar, or was it? No, I beg your pardon. It was not. So this is slightly lower. So that is in fact an isolated and a ringed high. But this may well give us an inside bar this week. Regardless, though, the rule states that if you're not in an impulse wave or have reason to believe that you're in an impulse wave, then those are not valid conditions uh, for impulse strategies. So, as of the close of last week, we're not looking at this any longer, but you may well be in trades from last week with the daily impulse strategy. So that would have been set up to go long using ATR targeting because the stop was too far away. And using our 2 5-step rule, I don't think we've been able to trail that. No, we haven't been able to trail that at all. So we're still in it. Yeah, let's wait and see. We did have an overlay winning here on that would be entry on open of Friday. That went straight to take profit. That's that little pullback that we saw over there. So yeah, winning overlay. We're still in a bullish daily impulse, which is a little bit below break even, but we can happily lose this one now. With one winner, one loser on that, and you would be you would actually have made a small profit across those two. Aussie Weekly, Aussie Swiss, Aussie Cad Weekly, I beg your pardon. We had again that bearish engulfing bar the preceding week, which pretty much guarantees that we're now into a bearish wave, and that was certainly confirmed last week. Back inside the channel, technically still a trend, but very weak. Nothing doing for us here on our trending strategies at all. But certainly here on the daily, we did have a setup for an overlay where we shorted the market, and that was one of our winners. Didn't quite manage to break out of the channel on Friday. Let's see what happens today. If it does, well, that's valid to keep shorting this market with our H4 impulse strategy. Aussie Kiwi, nothing really. We've spoken about our previous trades, how that bullish overlay, there was a winner. But inside the channel, so nothing doing at all. Before I carry on, I do need to say that this has been isolated, although it's not ringed. So do bear that in mind. This could give us a continuation, but regardless, we are inside the channel. There's no valid W or impact in there. Daily, likewise, stuck inside of the channel. We had a bearish overlay, which ended up being a loser. That was one of the losing trades. So yeah, otherwise there really is nothing for us to do. We might be looking at a setup to go long for a bullish overlay on this, but that's not really the most important thing to be looking at the moment. Kiwi Swiss, likewise, last week we got in a bullish inside bar. We are technically still inside of that bullish impulse wave until proven otherwise. Another one of those situations where we're seeing weakness, however. So here on the lower time frame, clearly that bullish cyclicity has come to an end. There was a setup for a bullish impulse. 2 5-step rule hasn't really been able to help us to limit our downside yet on this one. But certainly, 1, 2, 3, 4, 5, the end of today, hopefully we'll be able to start doing that. We would have survived this pullback. So I see the trader here hasn't taken any of these, and that's quite right too, because most of the risk exposure, or if not all, across some of these instruments had been soaked up by those earlier trades. So nothing wrong with not taking them. And in this case, that's just as well. Right, so last one on weekly is Kiwi Cad. We've had that overlay setup that we spoke about a week ago. That was a winner. That's pulled back, and looks like we might be getting this bearish continuation. Still too early to say, but either way, total failure on that resistance level, and we're coming back inside the channel. On daily, that bearish move on weekly shows itself with this breakout. So we had an overlay winner here, But with the breakout, if you were looking to start trading this today, that's certainly exactly what you should have been doing. You would have been looking to short this. I think you would have also stayed away from that in the run-up to non-farms, which in this case was actually a pity because that would have been a perfect H4 impulse trade. Whereas at the moment, it doesn't look like we're getting any nice setup with a small bearish impulse candle. It's a very big one. However, it's a valid setup. So if you've still got risk capacity left over from all of your other trades, then that's one to look at. All right, so quite a lot of directional movement across our 28 currency pairs, no question about it. So if you're trading those evaluation accounts for your funded trader program, then there's still quite a lot of action. Remember, we've just got to always focus on limiting downside, maximizing upside. Don't chase the trades. Rather step back. If you've missed it, you've missed it. And then look for the next one, or look for another one on another instrument where the conditions are appropriate. All right, so apologies again that we've had to do this as a recording, folks. We're going to be doing a lot this week with the masterclass coming up, starting tomorrow. So if you are not yet registered for that, then please make sure that you do that. If you've lost the link, because anyone watching this should have been invited, then please just drop us an email at info@gptacademy.com, or you can just drop a comment below this and let us know that you haven't received your invite for the masterclass. Now, remember, we are going to be recording the sessions, so if you can't make them, the recordings will be available for you to watch for a limited period of time. We do offer VIP membership to this masterclass as well, where you get a whole bunch of benefits and additional value, not least lifetime access to all of the training that we're going to be doing this week, as well as personal interaction with me, yours truly, so that I can help you to get direction in your trading, maybe help you to identify some of the things that's holding you back from success and put you onto the right road. So I hope that you will be able to join me either in person or at least register to receive a copy of the recordings of the masterclass that's going to be held through the rest of this week. Right, so as I said, this was a somewhat longer session. We've gone well over an hour. I hope it's been useful for you. I hope that it helps you to go back and analyze your trading in the last week, compare what I've discussed with what you did. Don't worry too much about the overlay. We're still testing it. Let's see what happens with that. But certainly, if you're trading our core strategies, you should be very much on top of the discussion. And if you're not, then again, make sure that you attend the masterclass. I'll see you there. Have a great week and take care. God bless. Bye for now.